Hello and welcome to Views on News. I am Jawad Tehami. In its World Economic Outlook update, the International Monetary Fund has projected Pakistan's growth for the current fiscal year at 3.5%. This particular forecast for the growth of Pakistan during the current fiscal year remains unchanged from that forecast earlier made by the International Monetary Fund back in April. When we specifically talk about the budget for the current fiscal year, the government gave in the month of June, the projection has been set at 3.6%. Also, this particular update of the World Economic Outlook by the International Monetary Fund talks about some near-term risks had gained prominence with implications for emerging economies and oil importing countries like Pakistan. We'll be taking the analysis regarding that. Also, international rating agency Moody's says Pakistan's staff level agreement with the International Monetary Fund will improve Pakistan's funding prospects. That important aspect also up for discussion in today's show. Now, this comes after the International Monetary Fund and Pakistan reached a staff level agreement for $7 billion in the extended fund facility program that spans around 3 years. And after that particular agreement, there came a statement from the IMF mission chief in Pakistan, Nathan Porter, saying, let me quote him, "The new program aims to support Pakistan's efforts to cement macroeconomic stability and create conditions for stronger, more inclusive and resilient growth," unquote. He went on to say that these measures are aimed at strengthening fiscal and monetary policy, bringing reforms to broaden the tax base, improve state-owned enterprises management, strengthen competition, secure a level playing field for investment, enhance human capital and scale up social protection. Let me quickly bring in our panelists. We are honored to have been joined in the studio by Dr. Nasir Iqbal. He is Head Macro Policy Lab, Pakistan Institute of Development Economics. Dr. Iqbal, thank you very much for your time, for being with us on the show tonight. We really appreciate that. Let's begin with this particular projection by the IMF. This is the World Economic Outlook update. The projection for Pakistan's growth during the current fiscal year has been kept unchanged at 3.5% from that already made by IMF back in April. The government has set it in the budget at 3.6%. How this projection by the IMF actually align with that 3.6% projection by the government of Pakistan?
I think to some extent it's like a very positive news for Pakistan, especially they are comparing other countries in the region and they are projecting the global GDP figure as well. So if we look into the global average, they assume roughly it's like 3.5, 3.3%. And it will remain the same in the next year as well. So if we think of our own country, we are a little bit aligned with the global average, though we are not above the global average, but still it's a very positive news for us in terms of that the international agencies looking for a very positive and a decent growth rate in the next year and in the coming year as well. So this would be considered as a starter point for us, how we can go about this fiscal year, especially we have started a new fiscal year and we are aiming a lot of reforms in this particular year. So keeping this in view, I think this is a good news. As you mentioned in your introduction, there are of course risks involved with this growth and we can talk about those risks in detail, but to me it's a good starting point to look into the future of our country and to see how we can materialize this growth rate.
So while talking about the risks in the near term, which had gained prominence as per this particular update, with implications for emerging economies and oil importing countries like Pakistan, what those near term risks could be and what could be the strategies to mitigate those?
I think if we look into the country, we in the last month we celebrated that our inflation goes down substantially, so it's true. But if we look into this current month, they are on the upward side. So one of the risks that the report also highlighted is the inflationary pressure. So it would be a very challenging for in the coming month to basically control this inflation. So the report documented that there are a number of reasons behind this. On the one side, there is a supply shock. On the other side, there is some sort of food prices. So they acknowledge that there is some sort of stability in the food prices and there is some sort of stability in the goods market. But the coming inflation is slightly different from the previous inflation. Previously, it primarily driven by the goods market where there is an increase in the prices, but this time there is a pressure from the services sector and also the wages. So, when you rely, especially after this COVID-19, the significant reliance on the services sector in terms of delivery of services, in terms of online businesses, something like that, there is like a risk in the near future that this reliance on the services sector would push this inflation in two way. One, by adding a more demand on that sector, other is there is an increase in the wages. So, wages ultimately fed into the high inflation. So, but in case of our country, we have to keep in mind the energy sector as well as the food prices, because the last month and this month the increase in inflation is primarily driven by the energy prices, and we observed in the last few days there is a significant increase in the energy prices that eventually will have a trickle down effect and substantially increase the overall prices. So, that will again give another new trend to inflation. So, we should have to be very vigilant how we can control this inflation by minimizing the disadvantage to the common people, especially the middle class and the lower class.
Now, what could be the strategies in that particular regard? I'll come back to you, take your deeper understanding regarding as to how to control that particular inflation at a certain threshold. For now, we are honored to have been joined by another participant on Skype, Dr. Khaqan Najeeb, former advisor, Ministry of Finance. Dr. Najeeb, thank you very much for your time, for being with us on the show tonight. Really appreciate that. Let's talk about firstly this particular projection that remains unchanged in this World Economic Outlook update by the International Monetary Fund for Pakistan's growth at 3.5%, earlier made in April at 3.5%. I think we have lost the connection with Dr. Najeeb. We'll try to reconnect with him. Dr. Iqbal, please go ahead. What could be the strategies in order to keep that inflation under control?
You know,
given the pressures that you've already described, also mentioned this particular update also, the food prices as well as the energy
prices and also the pressure from the services sector as well. So, we have to keep in all these three components in mind. So, you know, the prices is basically there are two main driver of these prices. One is the supply of the commodities, if you look into the energy sector, or the food supply. The another component that what we call the mismanagement or the lack of governance structure. So, to some extent there is no alternative to us to reduce the energy prices in the short term. So, we have to live with the very high prices, but the option that we have with us is to minimize the leakages in the system. So, if we reduce those leakages, probably we can minimize the overall losses and substantially reduce the pressure on the inflation side. So, this would be the key priority for this government to introduce reforms. The reforms basically meant to reduce the losses in the energy sector, to reduce the leakages in the energy sector, and to reduce the subsidized electricity that we have given to the higher class, not to the lower class, but to the higher class in the name of different packages and in the name of different subsidy package. So, we have to work on those angles. That could be a one way to reduce pressure from the energy sector. On the food side, we have to foresee, because we just like ended with the one food crisis in the wheat, and if we learn something from that crisis, we should be prepared for next 9 months or next 1 year. What are the demands in different grains like wheat demand, like the sugarcane demand, something like that. So, we should be fully prepared and make plan accordingly. You just remember that the government allowed to export sugar. So, do we are fully prepared about the future need of the country in terms of the sugar? If yes, we should public those documents and aware the common people as well as those are commenting on the government decision. So, they should be on board that look, the government is taking this decision and this is the rationale behind this decision. So, these type of governance measure would be needed to ensure a stability in the system. Once we have the stability, probably we'll be able to control the inflation, not to reduce, but at least to control the inflation.
Right, let me once again proceed towards Dr. Khaqan Najeeb. Dr. Najeeb, thank you very much for your time, for being with us on the show tonight. Really appreciate that. This projection remains unchanged in the World Economic Outlook update by the International Monetary Fund from earlier made in April, 3.5%. How does that align with Pakistan's budget projection of 3.6% as far as the growth is concerned? Also, when we talk about the measures after the Pakistan and IMF reached the staff level agreement, specifically talking about bringing reforms to broaden the tax base, there was a statement made by the IMF mission chief to Pakistan, Ethan Porter. Let me quote that the revenue collections will be achieved through simpler and fairer direct and indirect taxation, including by bringing net income from the retail, export and agriculture sectors properly into the tax system. Your analysis regarding that also, sir?
So Pakistan economy currently is typically behaving as economies do when they are engaged with the IMF. That means that we see a certain macro stability over the last few months, which means the following. Inflation has tapered from a high of somewhere 38% in May 23 to about 12.6% in June. There is the base effect. There are better commodity after the floods pass through, and Pakistan's pass through of the energy sector have mainly been done, though now we are seeing some new pass throughs in July, which may give an uptake. We've also slowed the economy by keeping the policy rate high. So that has made sure that our rupee has strengthened due to the higher policy rate, as well as some of the administrative steps we've taken. That has made imports costlier. Imports have come down. Exports have stayed largely in line with the expectations, and the resultant current account has almost come to a very manageable deficit. This is where the economy stood when we went into the budget. So I think the budget should have been a little less heavy on the taxation. The very press release, Jawad, that you're looking at, if you Google that press release, get it on your computer, and then type the word tax in find, there will be the mention of tax 11 times in that press release. So you can see that the country authorities, Pakistan authorities, were kind of led by IMF to have a budget which relies heavily on taxation, with a jump of about 40% next year. This alone would cast a heavy shadow, not only on the personal income tax of people like you and Nasir Saab and me who earn a wage in Pakistan, but also on the business growth of Pakistan, because the non-salaried tax in the higher bracket now goes to nearly 49.5%. Having said that, some good steps on the taxation are the emphasis on retail, bringing them in the coming months through a voluntary and then more of a stick kind of regime into the tax net, talking about the agriculture income tax and going to the extent of saying that by January, if the provinces do not do much on it, what we would do is to take that and move towards an agriculture income tax as a federal subject. I've always maintained that, like all other incomes, it should be a federal subject, as horizontal equity will only come through that. The real estate has also been touched with 15% CGT, capital gains tax, applying irrespective of the time held by the buyer of the property. Even now, I say this, that 15% they will pay, but a high income earner will pay 39.5%, and a non-salaried high income earner would pay 49.5%. We are still subsidizing taxes on real estate, but let's say step by step. The other aspect of fiscal pact with the provinces is also commendable. That is being done both by, maybe through the IMF. We've been saying this, that giving 60% to the provinces and keeping expenditures of major divisions, health, education, zakat, ushar, poverty to 590 billion with the federal government. is not fair because 7th NFC must be read along with the 18th Amendment. The budget is light on expenditure reforms and still kind of relies on the fact that a committee is working. Maybe it's a new government, so we'll give them a little bit more time. But expenditure reforms, they have started on pensions. They need to go whole hog. Targeting of subsidies and sharing of subsidies with the provinces. I mean, there's something extremely important. Reviewing the annual development budget expenditure in terms of making sure that we only do the projects that are within the purview of the federal government and let the ADBs, the annual development spending of the provinces, take over that. Then the kind of current budget increase of increasing salaries is something to be done. But you have to think through these things at a time when no one else would be able to match this 24% rise. The government has gone ahead and given this kind of rise to the public servants. So the provinces have to follow. That puts a lot of burden. So we have to start thinking about pay for performance, start thinking about incentivization for people to do well. So expenditure reforms should start taking central stage as we move along. Along this, we have talked about, again with the fund program, and the government does too, that these SOEs, which are 167 commercial organizations, and I know this for a fact because the first ever report or a book or the financial analysis was done by me in the government in 2012 when we published the federal footprint of the government. Nothing has changed. Besides, the losses have increased in number. The energy itself would be doing 600 billion rupees of loss this year, and the rest are there. The government is trying to move on PIA. I think we have been kind of forced to move on PIA. PIA would have gone into closure, 830 billion liabilities, nearly 50 to 100 billion losses every year. So we've been kind of forced. Let's hope we can get an outcome. It would be a good signal to the foreign people, but more so to the domestic guys that we are serious about moving government out of operations. So a leaner government, the number of divisions, attached departments, HR. I'm hoping that the new the committee that is working, it has identified, I think, 5 ministries to get rid of. Then the general subsidy goes up to 1363 billion rupees. It was nearly 1100 last year. So we have to, think about that. Then public financial management and NFC, whether through fiscal pact. So, if we move around these areas, we move to a leaner government, we move to, kind of taking the government out of all this. Energy reform, as Dr. Nasir was rightly saying, is the Achilles heel today. There is no band-aid there. There is no easy solution there. It requires supply side measures, demand side measures, tariff side measures, privatization, renegotiation of the IPPs after 2015. We have to have a lot of clarity. So government has a lot of work. If we can put together all this work, agriculture supports, and some industrial easing happens as the monetary policy eases and we move from the tightening cycle as we have started, and I think we should move a little bit more aggressively, even if the rupee was to move, if was to weaken, that's all right. And, let the impetus of industry fall through in this financial year. But all depends whether we can do all the hard work that we've talked about.
Dr. Najeeb, and now fully harmonizing their agriculture income tax regimes. The provinces have committed to this particular thing. The statement of Mr. Nathan Porter talks about it, fully harmonizing the agriculture income tax regimes through legislative changes. How do you look at that about agriculture income tax, and how big a contribution do you foresee when this particular commitment would be brought into practical manifestation?
Jawad, I'd like to do things because I think they are right to do, not because anyone from the outside tells us. So look at the 2 provincial budgets, Punjab and Sindh. Because, we as policymakers tend to focus a lot on the federal budget, but because agriculture is a provincial subject, so I just went ahead and looked at these 2 budgets. They have both earmarked 9.5 billion rupees, a petty amount of not even 10 billion rupees to be collected from a sector which constitutes 20 to 23% of our overall GDP. So a lot of the livestock, the big agriculturists, all these would have to be brought in on some kind of fixed regime to begin with. So I'm really hoping that, okay, under the purview of a program engagement with the IMF, and I think the local policymakers, PIDE, other institutions, and us as autonomous people have talked a lot about the horizontal equity in taxation. I mean, vertical equity may be difficult, but horizontal equity certainly. Easing of taxation on the manufacturing, bringing down. I was just listening to a debate on CNBC, and they were saying Donald Trump is a favorite because he wants to lower the manufacturing rate, bring back manufacturing back to the US, away from China. Just think, even if the process is there. And here we certainly think that horizontal equity would help us do so. So I'm hoping that in this year, we would see a new framework on the agriculture income tax in Pakistan, retail and wholesale tax in Pakistan, and a better evaluation of the properties that take place in the country as well. Then there are gaps in other areas also. The sales tax gap in the country, that also through digitalization, through the POS machines, through changing our mindsets, through behaving differently, that also needs to be looked after in this country. There are studies of tax gap analysis in the country, in the service sector, on GST, on the income tax. So the enforcement bit is the other side. IMF does not accept Pakistan's enforcement bit. This is nothing new. I heard the authorities talk about it. In Pakistan's 76 years of history, whenever we have said we will ensure compliance, enforcement, they never believe in that. But it is time for us to prove for once that this 40% would come a lot through enforcement, compliance, and areas where there is lesser taxation. I really want to see if we can really do all this work in 6 to 8 months. Before the next budget, instead of having a mini budget to increase our taxes, we should be looking at a budget which reduces the income tax on PIT, the personal income tax, because I have started worrying about the exodus that seems to be happening from Pakistan. The stories that I hear, both anecdotal and when I look at evidence, I think this is too heavy. And remember, who is your competitor? UAE is your competitor. To take your accountant. The accountant in Pakistan now is probably falling in the high tax bracket. There is no tax in UAE and the salaries are higher. So your competition is becoming more and more easier when you are becoming harder on these people. So we have to start, thinking about the country in terms of a social contract in a time where there is large political polarization. Gluing the nation back to at least Pakistan would require that we make the compliance easier. We get the folks. My contention always has been that instead of outsourcing Pakistan's thinking and saying that a homegrown plan would be made by people from the outside of Pakistan, it's my, always humble advice to any country authority. Put your people together, and not in any one ministry, but in Ministry of Finance to do the budgeting frameworks, in energy to do the petroleum, power, water, and gas sector analysis. A lot can be done if these people can make and design frameworks and use the local knowledge to move forward. IMF, all the external programs can give you a certain time, a certain balancing space, a certain semblance, as we do have, mashallah, in the economy today. There is certain stability, rupee is also stable, but this can only be cemented if we are able to do the surgical treatments in the key areas that we've just talked about.
Right. Are there any sort of risks to advancing this reform agenda? Also, given the fact the global rating agency Moody's talks about the increased prospects of Pakistan getting that funding, also talks about what is required in the current fiscal year and the fiscal year 2026 and 27. What could be the potential risks in advancing the reform agenda?
It's a very, very important point. I think one, the risk is to be still lost in bandages rather than the surgical bit. Going to try and containing the wound rather than going inside to see why there is a wound. Like, if you go into the power sector, you would see that there are so many areas that need to be knitted together, from an energy ministry to an energy regulator to a market creating mechanism to discussing with the IPPs. The other risk is that the 40% uptake on the tax would be hard in an economy which is growing about at 3.5%. So people would tend to fall out of the tax net, use other measures. So we have to be careful that this 40% seems high, is looking high. The third risk is that Pakistan's inertia in the system prevents any foreign direct investment, domestic investment, and that has taken our investment levels to a 50-year low at about 13% of GDP. Now, I consider that to be a good, starting point for us to realize that investment to GDP is a key area. It improves countries' productivity. Look at your neighbors, look at China, look at Asia, look at East Asia. Anywhere between 25 to 30% of whatever they were earning, they were reinvesting through FDI, through domestic investment, and through public sector investment. Now, this whole framework needs to be designed. My biggest risk always will remain on Pakistan. Can we put the competence in Planning Commission? Where can we put the competence in Energy Ministry, in privatization, in all these areas to deregulate the economy, to make the government retrieve from these areas? There is also a mention that we will stop doing agriculture, commodity work. That again comes through the IMF. It sometimes, baffles my mind how, we cannot think all these things to do on our own. But engagement helps, and sometimes IMF can put you in a jacket where they can make you do these things. And then, of course, the political uncertainty along with all this is there. But I really hope that some privatization, we have been talking about the Reko deal. Some deals in the next 6 to 8 months would come through, which would give an impetus to Pakistan. It will put Pakistan on investment framework, and along with program chugging along, things would be more stable and a bit of more growth would come through, especially through the industry and not only on the agriculture side.
Right. Thank you very much for joining us at Views on News tonight. Dr. Khaqan Najeeb, former advisor, Ministry of Finance. We really appreciate that. Dr. Iqbal, now, what, as per your understanding of the risks involved in advancing this reform agenda?
I think Dr. Najeeb rightly highlighted a lot of things in terms of the risks, especially, to me, what would be the starter? The starter would be the political will. All the measures that Dr. Najeeb mentioned and we at PIDE suggested to government in terms of introducing the reform, they are all linked with the will of the government, because these are all the harsh decisions. These are not like the easy solution. For example, if you look into the agriculture sector, there is a lot of debate on that. The agriculture sector is contributing around 20 to 22% of the GDP, but when we talk about the tax collection, it's negligible. There is nothing from the agriculture tax. But if we have to go for the agriculture taxation, now the question is how we can collect that, because they are operating in the informal sector. There is no agriculture market, there is no seed market, there is no fertilizer market, there is no storage market. In the absence of all these markets, it is very difficult to collect tax from the agriculture sector. How you can tax them? Either their income, how you can gauge their income, it's the sale of the agriculture product. These are all open questions, and we should be very vigilant about these questions while implementing agriculture sector. For provinces it would be slightly easy because they have like a well-defined system at the very grassroots level, especially at the union council level or at the tehsil level, to know about the production pattern, to know about the all kind of things. So yes, for the provincial government it is slightly easy to document this agriculture sector, then start making some sort of fixed tax. They already have some sort of fixed tax at the agriculture sector, but they have to rationalize it. So this could be the starter in terms of collecting these things. So to me, the major threat to this entire process is the stable government. If we play with these like small items where we are playing with each other in terms of sometime in terms of number of seats, sometime in terms of other legal and political issues, so then it will weaken the decision power of the government. You know, the Khaqan Najeeb rightly mentioned that if you go for privatization, for example, PIE privatization, or even you can take a very small element, this utility store corporation, you cannot privatize without a political will. So, if even a small item where we say that the worth of this utility store corporation is only 50 billion per annum, you can't privatize it. How you can privatize a steel mill? How you can privatize a PIA? How you can privatize all discos and other energy sector? For that, you need a very bold decision. For bold decision, you need a backing. Yes, the other major component that I feel would be the main challenge for the government is to increase the investment. Khaqan to some extent highlighted the importance of investment. We should have to increase from this 13-14% to at least 20-25%. But how can we do that? If there is an unstable policy environment, if there is unstable political environment, if there is unstable power environment, then how people can make investment decision? Because investment decision is a long-term decision. Even your domestic investor have no confidence on the current system. How can you convince an international investor that come to us and make investment? We are struggling with the FDI. Even China and other brotherly countries, they are not coming to invest in our country. They are willing to give you to some extent aid or loan, but they are not forthcoming in terms of making investment because there is no stability. We are just talking about the mini budget. Why we are talking about the mini budget? If we have a stable policy, then whatsoever is the mechanism, we should be fully prepared while announcing any kind of budget. This was like a heavy tax budget, but there is no discussion on the expenditure side. So, if we have to in the near future, if we feel there is an increasing deficit, rather than going toward the increasing the tax burden to the existing people, we should have to rationalize the expenditure. We should have to rationalize the 3 trillion tax expenditure in the name of subsidies to the different sectors. We exempted lot of income heads from the tax. Just try to increase the tax rate on the existing taxpayer. That is totally unfair. If we look into the growth pattern of our neighboring country, China is growing around 6%, just IMF report mentioned. India consistently growing more than 7 to 8%. Why? Because they allow their businessmen to make a long-term investment. They attracted a foreign direct investment by giving them the incentive, by giving them an ease of doing business, by giving them a persistent economic policy. So, this is what we are lacking in our country.
So, what is required in order to this particular condition? One of the conditions under the extended funds facility program with the IMF talks about gradually liberalizing the trade policy. What's required for that? What could be the broader contours of that?
You know, the PIDE like before budget, we announced a tax commission report. The objective of that report was to give an alternative tax framework, a tax model where actually you can collect the same tax or even with the higher tax by reducing the tax rate. On all kind of tax rate, we propose to reduce the GST, we propose to reduce the tax on the salaried person, we propose to reduce the tax on this trade sector, because the global evidence say when you reduce the tax on the trade sector, it will give you the leverage, it will help you to actually increase the total tax collection. And we did all the calculation. It's not about the hypothetical that we give a hypothetical scenario to government that look, this is our proposal. No, we come up with all kind of calculation. because the ultimately question to us would be, if we reduce, how we can meet the tax target. So we calculate all kind of.
So isn't that a very pertinent question?
Yeah.
I mean, if you reduce the tax rate, how you are going to broaden and how are you going to generate revenue to meet the target?
Yeah, that could be the second question. Ultimately, the policy maker would ask the same question to us. And we did the answer. You know, there is a lot of leakages. As I earlier said, there are almost 3 trillion tax exemption, tax expenditure. If you eliminate these 3 trillion tax expenditure, it will increase your tax collection. If you eliminate all those at where you give a full subsidy to the tax, it will minimize your leakages and increase the tax collection. Further, if you reduce the tax rate, especially on the trade sector, it will minimize your smuggling, it will minimize your leakages, it will minimize your rent seeking. Ultimately, it will give a confidence to trader as well as the other businessmen.
Okay, so let's specifically dealing or addressing this particular phenomenon of smuggling. Even if the tax rate is reduced,
Yes.
and that is pretty much affordable, and still you are pretty much sure the people are going to register themselves to give the tax.
Yes, you know, we did
And
like
not resort to that particular phenomenon of smuggling.
Yeah, you know, you cannot eliminate.
What could be the guarantee of that?
Yeah, you know, you
The calculations you've done, you've said
Yes.
it, they could be right at their place. What about the mindset, how to change that? Even the tax rate is reduced, how it guarantees that the smuggling would be addressed completely
you know,
altogether?
the question is why people start smuggling, you know, or why they use informal channel. There is a cost of informal channel, there is a cost of smuggling. You know, if you reduce that cost and substitute that cost with the tax rate, ultimately that would be the easiest path. You know, it will reduce their transaction cost number in terms of the delays in the processing, to in terms of threat and in terms of other stuff like that. The people, those are trading, they are willing to pay, but the question is whether we are willing to facilitate them in terms of their, you know, look at the example of other countries. It's not about the Pakistan is a standalone country in the world. Look at the example of other countries. Whenever they rationalize their tax, they create equity in the system by imposing tax at the different level according to their capacity, and they reduce the tax rate. It ultimately help them, one, to formalize the economy, two, to increase the overall tax collection. You know, we are talking about the registration of the retail sector. There is a bill at the government sector, but still we didn't succeeded because there is uncertainty, and we are sending tax collector and other inspector to the common people, and they are threatening them. So if this is the way that the people didn't trust you, the alternative solution that we propose, digitize everything.
Okay, so
we have the CNIC, digitize everything. My record is available to all kind of the sector, all kind of the void dog. They are
so that
looking to us.
digitization drive is already underway for the
Yes.
FBR. So you think that is going to address the problem altogether completely?
If we go for a full digitization, if we look into the system that the FBR is looking for to document the one part of this whole ecosystem, and the other 90% remain out of the ecosystem, then you cannot get the required benefit. You have to fully digitize, you have to simplify the tax return submission process, make it a one-page document, make it a like 3-liner document where I can like report my income, my expenditure, my saving and my tax. Why I have a 5,000 line to fill in? I can't fill that. Make it a 3-liner. Ask everyone to fill on your mobile. Ask everyone to apply for your electricity connection on your phone. Ask.
Right.
These
You've
kind
been talking about the
systems
expenditure, the
we needed.
leakages also, right. So here is ahead, the interest payments, they happen to be quite higher.
Yeah.
I mean, how to address that particular lingering problem when it comes to debt servicing, that interest payment and interest payment on the principal amount? Is there any policy suggestion your institution has made about
I
that
think
also?
we should be very like be careful when we are talking about the policy rate, because there are two sides of this policy rate. On the one side, if we reduce the overall rate maybe in the coming month, it will definitely help to boost the economic activities and the business, and that on the other side the advantage is it will help to reduce your the interest payment, because every 1 unit of interest rate would have around 3 billion interest payment. So if you reduce like 3 points, it will help you to around 9 billion rupee in terms of saving from the interest payment. The second component, of course, is the other side, that we should be careful about the inflationary pressure. If we give some sort of go ahead to the consumption economy that what we have, so probably it gives some pressure, and it might increase inflation, but we have to create a balance. That's the policy. No?
Right.
What we have suggested, we are suggesting, look at the pass through of this interest rate. On the one side, we have a huge massive cost in terms of these interest payments, and the government is borrowing from the private banks, and they are paying a lot of money to these sectors. On the other hand, there is some inflationary cost. So we PIDE proposes some sort of rationality behind these two components.
Right. For now, we are joined by another participant on Skype, Dr. Hafiz Usman. He is economist and financial expert, currently working as a director for business finance program at the Birmingham City University in the UK. Dr. Usman, thank you very much for your time, for being with us on the show tonight. Really appreciate that. Now, the recent agreement between Pakistan and the IMF regarding the $7 billion extended fund facility program, how big a respite it is going to give to Pakistan's economy in the immediate terms, and what's required for the Pakistani authorities in order to advance that reform agenda?
Thank you so much for having me. This is a very good news that IMF approved $7 billion. And if you see the global economy in a sticky spot at the moment, and there's an upside risk to inflation that have increased and raising the prospect of higher for even longer interest rates, like we are just talking about that one. But overall, Pakistan economy is recovering slowly. Pakistan rupees, if you see, has remained below 280 and now stand at 278 against the US dollars, compared to 306 in August 2023. And if you see, in May 2023 last year, Pakistan foreign reserves were 8.53 billion approximately, whereas in May 2024 it is 14.2 billion, showing an increase of 66% compared to the last year. And if you see the Karachi Stock Exchange index, that is also showing a positive sign. That is increased 18,705 points, or you can say that 29.95% since the beginning of 2024. So this is actually the highest stock market jump in the history, and consumer confidence indicators showing a good sign. So overall, we are going towards in the right direction. And if we want to improve our foreign direct investment, then we need to work on our shadow economy, and we need to document our undocumented economy. Also, we need to provide economic freedom to the investors, which is very important, and the rule of law. So these are the fundamentals that we need to work on. And also one thing which I have recently observed, that there should be harmonization in the policy. If you see across all provinces, there should be a consistent regulatory framework, clear laws and policy. That should be the key, or you can say that priority to the government as well. So we have to work on these kind of aspects and fundamentals, so that we can go for long-term solutions rather than just stick on the short-term solutions. And also another fundamental is that we need to have a fair taxation policy. Yes, the government is working on, like my colleague just said, that the government is working on the digitization in the FPR. But yes, we have to have this one more quicker. We can't wait for the next 2 years, but we have to get the solution as soon as possible so that we can improve our economy and put our economy into the right trajectory.
Economist and financial expert joining us from the UK. Thank you very much for your time, for being with us on the show. And Dr. Nasir Iqbal, Head Macro Policy Lab at Pakistan Institute of Development Economics, joining us in the studio. Thank you very much for your time, also for being with us on the show tonight. Really appreciate that. With that, we come to the end of today's show. Thank you very much for watching.